So some detail, right? Who's here? Hopefully no one got catfished about actually stealing cars, like breaking in. Great. So I won't be kind of breaking into how to break into a car, more like how could I acquire a vehicle at relatively low to no cost. So the title of today's presentation, How to Steal a Car, the Technology Behind Synthetic Identities. I'm Brady Harrison. I lead strategy and execution for Count, an Equifax company acquired by Count in 21. We're a fraud and identity provider and compliance globally. I'm speaking my personal capacity today, right? None of my views represent Equifax or Count, so just kind of keep that in mind. This is an interesting area for me professionally, but not necessarily, our views there. Any questions, right? So this can be interactive, so if you have a question in the middle, I'm happy to answer or provide clarity, right? I'm happy to stand and deliver, but it's interesting if folks have questions or commentary, right? So overall, does anyone know what a synthetic identity is? Cool. And then expect, based on that, historical legacy of what a normal credit score looks like, that you're going to repay, right? Does everyone who knows what their credit score is, right? Raise of hands. Okay, so everyone's pretty familiar with credit as a concept, right? The lower your score is, the least likely you are to repay, right? Statistically on an actuarial basis. So what these do is it kind of takes advantage of that system. Can I create an identity that looks like it's a low credit risk, but in reality, my propensity to repay is almost zero because there's no real person behind this, right? I create Fred Flintstone, I get a new car, I am then able to resell or purchase that car, which we'll talk about a little bit, and then Fred Flintstone doesn't have a job, doesn't have a house, he doesn't even exist, and so his propensity to repay is zero. It's just kind of taking advantage of the kind of paradigm that we think about credit. So why are we talking about auto specifically? Losses are large, right? If you look on a percentage basis, about $2 billion in losses in 2024 from synthetic identity theft for auto, i.e. I create a fake person, get a loan for that fake person for a vehicle, I keep the vehicle, and then ultimately that vehicle never gets repaid. Interesting bits, so it's pretty large. We're talking $2 billion overall just last year. That's about a 105% increase in the last 5 years, right? So from a risk perspective, this is where a plurality of losses are starting to come from. If you look at fraud losses for dealers and auto lenders specifically, it's about 75% of losses. So if you think, hey, X number of cars don't come back to the dealership, of those, it's 75% of fraud losses are this synthetic. It's really interesting to see the increasing price of cars and the increasing cost to finance a vehicle. If we can cut, 75 basis points out of the total ecosystem, right? That's a lower cost of credit for everyone in this room. And so dealers are kind of having to foist these costs onto other people. And so this is why synthetic is kind of a risk scenario for everyone. Number one, if they're losing 2 cars out of 100 to synthetic, it's more like 1.2 cars, but can't cut one in half. So in essence, they're going to lose the profit they make on about 1 out of 100 cars to synthetic, meaning they have to recoup those costs elsewhere in the business. And so that generally means lenders increase rates, which makes buying cars more expensive for all of us. So that's why we're specifically talking about auto. There's a lot of risk. Second, it's the easiest thing to steal. So I'll talk more about in the exploitation, why you pick cars versus other opportunities to monetize a synthetic. The other bit is unlike traditional identity theft where I steal someone else's identity, right? So Mike is here, he's gonna have a great panel later on AI. It is more challenging to take all of Mike's information as my own and use that to steal a car. It's not as hard as you think. Not the topic of today's presentation, but synthetic is even easier than that because I have to prove that I am Mike, right? I probably have to look like Mike, have Mike's identity documentation. That's pretty hard, and it's pretty easy to catch because you're like, hey, you're trying to buy this vehicle with Mike's info in another state. Mike doesn't live there. It's pretty easy to capture versus a synthetic where I create a new identity. I create a new Mike, a Mike 2.0, around with some of maybe Mike's info. Maybe I use Mike's address, or maybe I use Mike's social security number, but then I combine it with some synthetic information, like maybe my phone number or someone else's email. And then I don't have to steal Mike's info. I just have to trick the lender that this person actually exists, which is much easier than you think just based on how we build this kind of concept of a financial identity. As part of that, there are really two kinds of synthetics. There's either totally manufactured, right? That's where I create someone whole cloth out of nothing, right? I don't use really any real information. And then there's like slightly manipulated, where I would take a little bit of Brady's info, a little Mike's info, and then combine them together and make slight variations. Like maybe I do a new address for a new card, and so I build up a identity under that address where maybe I also already live. And so there are really two main flavors. But in essence, I need to create out of nothing this fake person who doesn't exist in the real world, but exists in the credit file and exists in the financial system. And in doing so, I can kind of exploit how credit scoring and others works to steal a car. Any questions on that side of it, right? Why do this versus other forms of identity theft? In essence, there's nobody to report it either, right? So if I steal from Mike, Mike's gonna look and get his credit report and be like, I did not buy a car last week. When you have a synthetic, there's no one to report the theft, and so it's a little easier to kind of continue the scam. Kenny?
Maybe like a softball one, but like when I was getting my first credit card, my mom told me like, oh, you need to start using it even if you don't need to, so you can build up your credit score. How come that's less of the case or not the case when you're building a synthetic ID? Basically, how do we get around the checkpoints to monitor like, oh, this account was just created?
So we're going to talk about that in a little bit called seasoning, right, of how we actually generate these, because just getting the card is one thing, but we need to see activity in that account to take you from like, if you open a new credit account, you might be like a 650 or what we think of as like, or even below like a subprime borrower. Synthetics, you really want to get to that super prime number, in essence like 750 and above. And so to do that, you start to build or season that credit profile. And we're going to talk about the most efficient and best tasting seasonings here in a moment. But thanks for the softball. So really why they work is that detection part is substantially more difficult, as I mentioned, right? I'm not having to beat the credit file and prove that all of these things work together. I am using the credit file against itself, right? And there's no counterparty risk where there's someone's identity I have stolen that could report on it, right? I know as the synthetic what all my synthetics are doing, right? I don't have the risk of someone else's social security number coming into my synthetic and reporting that as identity theft, and that kind of breaks the whole scheme. The downside, much easier to do, substantially longer to execute, because it takes weeks, months, years to build up these synthetics, and so it needs to be easy and low risk and stay low profile for long enough that I can build up that synthetic. And if I'm using other people's identity, it makes it easy because you just takes one person's address or a credit file, and then the whole thing goes away, and your $1,000 or $2,000 cost to build a synthetic is evaporated. The other big benefit is the gains are usually substantially larger, right? If I'm stealing from Mike, right, Mike's getting a lot of play, right? So I'm going to pick on Mike for a little bit. I don't know Mike's credit score, but let's presume that Mike's like a solid credit risk, but not great. And so if I steal Mike's credit for a personal loan, I maybe could get $40,000, $50,000, maybe less than $10,000 in profits. And I only get to do it one time. Versus a synthetic, maybe I build up that synthetic to like a 750 plus, and I get a $100,000 personal, no security, no deposit, personal loan for $100,000. And I could get 3 or 4 of those in the same day. And now I've turned essentially, $20,000 in gains to $400,000, $500,000 in gains because I have a 850 with high income. And so that's why the gains are substantially larger, right? Because I can pick on and build up and target things specific rather than being an opportunist and targeting, well, Mike is this credit score and he lives here, so I probably have to get a bank from there who's willing to offer unsecured personal loans, and I might only be able to get 1 or 2 before he notices. And so that kind of starts to create issues versus a synthetic, right? I could go get a Lambo, right, and resell that, which I'll talk about momentarily. 4 or 5 of those in a day. I have $1 million of vehicles on a shipping container by the close of business. Right before Ailford opens, I could have 4 Lamborghinis shipped off somewhere else, right? And so you just start to take a much larger bucket because you can hit the same identity 3, 4 times in a day. And if you're really sophisticated, we'll talk about credit washing at the end, how I get to reuse this synthetic. So substantially larger losses, and I can apply for a diversity of fiscal instruments, right? For identity theft, right, I might be able to get a credit card. I'm 1 or 2, but it's gonna be hard to get like a house or a car because they're maybe checking that. But with a synthetic, I could rent a house and then have someone rent it out for 3 or 4 months, and I get to monetize all of those homes. Where if I just did identity theft, I would really be stuck on maybe 1 or 2 items, right, overall. And so this is really why synthetic makes sense as an option. Overall, for framing, US lenders lost about $20 billion to fraudulent consumers who set up multiple trade lines in a short period without the intent of repayment. So we're talking like huge numbers of risk. Some of it is just being written off as credit risk. I think a fair portion of your super prime first payment defaults. I'm a super high credit score and I just don't pay after the first loan is a more material percentage of overall credit losses than we think, right? It's kind of a hidden problem because it just looks like credit risk. It just looks like Brady's a bum versus Brady doesn't exist. So mechanically how this works is I might take I'll use Jane's name because there's really not a super strong connection to name. I need some kind of physical address that I can use that it's maybe vacant, or I create a synthetic to borrow that address, right? Maybe I rent a home, right, or rent an apartment, and then I'll use a SSN that I find or a credit privacy number. And so none of these things make sense together in context if you actually dug into the data, but these 3 things together don't exist in the credit file independently. But I, by creating this synthetic, have created a new fiscal entity, JaneQ Public, with those identities. So now that person, quote unquote, exists. And so, as Kenny mentioned, I have to create that fiscal entity. And so that's really the first thing that I do is go through the fabrication process. I need to create a fiscal person. Any questions on that side of it?
Just on your previous slide, would it be realistic to, instead of creating 1, persona, to actually create 3 personas, using JaneQ Public's address, the middle guy's name? Could you essentially would someone typically create kind of multiple identities using all combinations of that? Or?
Yeah, so you're thinking in scale, right? Scale effects are always important for your business. And so that's really, can I reuse these SSNs multiple times and try to play games? And so I can create multiple synthetics with slight variations, right? It's easier for me to keep track of, because you're getting all these bills and all these emails. So if you have some coordination, it's easier to keep track of them all. But as we'll see later, people are starting to use AI to kind of manage this process, because we have people who have tens or hundreds of synthetics that they're managing all at the same time, paying bills, making money, right? Managing this process and doing that by hand is quite complex. And so AI agents are becoming a common tool to kind of manage this process. And so that is what most folks are doing is well, if it works once, why would I stop, right? And so they're creating multiple synthetics that have slight variations and or totally bespoke options. But it is efficient if you already have an address or an apartment building to kind of reuse it multiple times, or slight variations on a name. Which is, when we talk about detection, that's one of the ways that we can hey, this is odd. Why does the same name combination have a bunch of different identities? And so there's some cool stuff on advanced vector embeddings. Are there any ML AI people in the room? Cool. So in essence, rather than just creating a thing that you match to, or you use Levenstein distance to measure the distance between 2 things, you create this complex math equation that says JaneQ Public. And so it's really, really good at if you do Jane public or Janet public or Janet like Quincy public, it will put all of those together, even though they're pretty diverse from like a distance perspective. When we think about, we would all human readable be like, these are all the same. But a machine, it's actually quite challenging to say machine, Jane Q public and Janet Q public are the same person. They're like, well, no, they're different. And if you use Levenshtein distance, which measures the distance between character substitutions, it will handle Jane Q public and Janet Q public well, but it wouldn't handle Janet Quincy P in the same way that an advanced vector embedding would do. And so that's some kind of tech background stuff that you can use to bring things together. So if you ever diverse name matching, look at vector embeddings, because it tends to be interesting. So first I need to fabricate. So I need to create this fiscal identity. So the first and most generally important thing is I need SSN or a social security number or a social security number-like thing, which sounds like vague, but we'll talk about what's called a credit privacy number in a moment. And so I can create a fake SSN, so I can acquire one or use like a number generator to get one. I can use a child's, right? This is particularly heinous, right? Well, people will use people under 18 who have a valid social security number. I don't know how they can get credit, but they're valid. So if you do a social security number check, you're like, yep, this is a valid social security number. We're good to go here. I can steal one. The hot thing right now is if you move to the United States as like a student or on some visa and you engage with the credit process for some reason, maybe you're like you have one job and you need a tax ID or SSN, they'll give you one. And then you go home, right? And so now we have a valid SSN that works, but no one is using, right? They've moved back to the Netherlands or France or China. And so the hot thing right now is we start to see dormant social security numbers from people who are here temporarily and then move. Those start to get reactivated. So I've acquired one of these from some list or someone who's died. And then people are not handling the master death file that well for that this social security number is associated with a person who's no longer alive. So, okay, so I've got my identity kind of sorted. Now I need to, as Kenny mentioned, I got to season it, right? So I need to create that fiscal identity. And the goal being as I add information, maybe an authorized user, or I get a secured loan, right? Or a secured credit card. Does everyone know what a secured credit card is? For the people who don't, you can get credit, like a credit card, but you have to give them $500. So you're essentially no credit risk. The bank is going to, if you default, I don't pay on your credit card, they'll just keep your $500. These are great for credit building and great for seasoning for synthetics. So now that I've generated this synthetic, the next step is I need to exploit this. So now that I have a real fiscal identity, I got Brady or Janet Q public, and I need to then monetize that identity. So now I have this thing that I probably spent a couple hundred, maybe a couple $1,000s on. I need to return that money, right, high ROI. So people are looking for the 10x or 20x on these, right? Because think about them as a business, right? They're not doing this out of the goodness of their heart. They're like, I'm doing this so I can make money. And there's some material required. And so how can I turn that $2,000 investment into a $200,000 or $300,000 return? And that's the exploitation step, where I start to get loans or cars. I think cars are kind of the best way. And then I turn that and do what's called a bust out, right? So then I monetize that with no intention to repay, and then the synthetic is gone forever. Unless you credit wash it, and then you gotta reuse it, which is kind of the hot trick right now. So that's really it's kind of a 3-step process. Get the stuff to make that person exist as a low credit risk, and then exploit that low credit risk for issuers and loans. We can't ever not talk about AI and Gen AI. Everybody familiar with Gen AI, class of algorithms that create new content? I think the interesting bit here is they generally have robust trust and safety layers, easy to exploit. Like a couple years ago when ChatGPT came out, if you asked it to create a fake identity document, it wouldn't do it. It's like, hey, I can't do that. It's outside of my rules. If you asked it in Swahili, it would do it, right? Because the trust and safety layer in Swahili was not as well developed. This is kind of outmoded, Now you can just, like, is everyone familiar with Llama, the open source meta algorithm? You can just install that onto a laptop with no trust and safety layers. Just like go open season on whatever you want it to do. And so now there's substantially more risk on the synthetic side of it. And so Point Predictive, they're a fraud provider really big in the auto space. They do some telegram analysis of criminal channels, and they saw a 644% increase in discussions around using deepfakes and AI between 23 and 24. A lot of this focused on how can I use these tools and technologies to supercharge my synthetic process, right? Before, if I could only manage like 2 or 3 synthetics at a time, I can use an AI agent in deepfakes to manage dozens or hundreds at a time. In addition, I can develop synthetic imagery to match a legal document, where before I would have to either get a doc and like try to mess with it. Now I can use a synthetic to say, hey, this is the photo of my synthetic person who doesn't exist on the driver's license document. So I take a real ID, I overlay a fake identity over it, and so now it looks real. And I can get consistency with that document over time. If you're really sophisticated, you can use these synthetics to develop fake businesses, fake Instagram accounts, right? All of that kind of vein. So you make that person feel more real. Where before it would be kind of intensive to find photos of the same person and regularly post them and make them do, you know, interesting things in their Instagram life. And now you can use generative AI to kind of produce all of that content. You know, I can have a fake image of Janet Q Public with a fake profile post and some fake reviews on Yelp to really kind of fill this identity out. Go ahead.
This is maybe slightly off topic, but can you also do that to like add in metadata on a photo?
That is challenging. This is super interesting to me that the AI detection on photos is really challenging right now. A bunch of people are saying they can do it, but like in situ or real life tests, like people fail like the vast majority of the time. We did some recent research, and it was like 50 to 60% of people cannot identify a Gen AI document or photo, and technology can only do it like 55%. And so people are worse than the technology, but the technology is still pretty bad. And so if you're really sophisticated, yes, you could generate metadata into the image, right? Because Instagram is just looking at the image and then posting whatever metadata is attached. But if you're smart, you scrub the image metadata and then post it. Like, so save it, PNG it, or then transfer it or screenshot it, and then all that metadata is wiped away. And then you could post that.
Would that be a flag then for a generated image, since like normal people aren't going to scrub their own photos?
Yeah, potentially, right? If you're Instagram or someone in that vein, you could look for like, hey, this doesn't look super real. That said, lots of people edit their photos on Instagram. And so you may have a super high false positive rate overall. And so all of these things are like edge case scenarios that people just continue to take advantage of. And so that's where I would use it to manipulate these KYC systems. Has anyone done a digital onboarding KYC recently, or know your customer, where it's like, hey, scan your face? It used to be that I would just take a photo of the driver's license and that was good enough. These synthetic imagery is good enough now that you can tell it, hey, here's my driver's license, insert my photo or synthetic identity photo into that driver's license, and it beats it. So then people started doing liveness detection, where you have to like look around at the document. And now Gen AI tools are starting to beat those liveness detections as well, right? Because you can put a filtering layer over your face and it moves and looks correct overall. And so this synthetic is just kind of supercharging these issue areas, because it just keeps breaking the paradigm of like images are real, text is real, it's expensive to make all of this content. That is how it used to be. That is no longer how it is. To your questions about automating, right, there's this tool called CPN Wizard. We'll talk about credit privacy numbers when we talk about creation. They're essentially stolen SSNs. You can actually use it to automate, right? This is a tool that you can buy on the dark web that automates this synthetic process. Which social security number do I want to use for this new account? What payment do I want to make to season this account, right? What identity do I want to use with it? And so it can automate that kind of intelligent process.
You have 11 labs listed there that they do voice AI models. How's that incorporated?
So some folks, this also outmoded thinking is that you used to be able to voice verify to get into your bank, which does anyone know how long it takes to copy your voice?
They do 2-minute quick ones and like 30-minute for like a pro model.
Yeah, that is the first time I've ever heard the right answer, just like unprompted. It takes 2 seconds of voice audio to copy your voice. So this presentation, ample. Your question, also enough. Hello, this is X, is enough to copy your voice. So they're doing this so they can pass some voice verification, actually talk to the bank agent, have a consistent voice talking to the bank agent. So they can have a filtering layer between their voice and the bank agent's voice to then beat those verification systems and actually talk to the bank agent, right? If anyone's ever seen 2 AIs talking to each other, essentially that is what's starting to happen, that I can create a consistent synthetic voice to go along with my synthetic identity. So the big thing here is really all of these processes for validating that someone exists are based on technology that might not be relevant in a generative AI world. And so we are thinking long-term as like fraud prevention is like, what can we do now that your voice is not yours, your face is not yours, your fingerprint maybe is still okay. How can we verify people without that information? Because it's so easy to copy. So now I get to fabrication. So I need a social security number or a CPN. I'll talk about CPNs again in a moment. So really, social security number is really the key. It's kind of the hardest bit to get. Addresses are easy. Phones are in this kind of fake document part, so that's easy to get. Emails are obviously super easy. But I need a SSN. That's the hard one, right? We, as the US, have decided that we have this public number that's also a secret identity document and key that pretty much everyone's has been released at some time or the other, and for some reason that's the key. And so we need one of those, and they're issued to pretty much every American. And so I can usually buy one is probably the most straightforward because they're everywhere. Downsides of buying, they probably are already used, might be reported as stolen or flagged, and so it's a real mixed bag. You kind of got to wait for some upload of a new one, and then you have to try to monetize it quickly before other people do. And so that's really like dark web marketplaces. I haven't seen it on the clear web as often, sometimes advertisements for Telegram channels, but not like clear web. The other option is you get people to give them up, right? Especially phishing elderly folks, like IT phone scams. You can get high quality SSNs that are valid from unsuspecting folks. And so I can acquire them myself, right? That might be a fake bank website or like a fake loan website. I recently, last year, applied for a loan with ICCU, which is great, wonderful experience, totally digitally onboarded. I've never been into their office, ever. And they gave me a mortgage, which is, in my mind, is like crazy. But that is, if someone set up a fake ICCU, they recently changed their name from Idaho Central Credit Union to ICCU because they cover places outside of Idaho now. You could create a fake website and get someone like me unsuspectingly to put their SSN into this form to sign up for a bank account, and now I have acquired that SSN. This is a common mode to get people to actually just straight up give you their information. This happened to British Airlines in like 2021. Somebody got into their payment workflow, and rather than breaking credit cards, they just let people enter them when they were buying tickets. Go ahead.
I was actually going to ask you if you think we're going to be moving back to more in-person, like transactions to mitigate this.
Actually, no. I think the juice is not worth the squeeze, right? If ICCU is like, you have to come in to open this account, I am a millennial enough that I would be like, like, what are my other options here? And so working with FIs, it's key that this like digital experience needs to be so good. I was traveling last year, and I was with my wife, and it's like super early in the morning, and I wanted to get some Alaska points so we could get in the lounge, because I was like trying to do the point thing. And I was laying on the ground because we had an overnight, and I applied for a credit card online, approved card number, good to go in like 20 minutes. Alaska is going to say absolutely, because they're going to get my money, right? They're not going to want me to come into, right? Alaska, no physical branch, right? The neobanks are also making this kind of challenging. We also bank at Umpqua, and they have one office. It's around the corner. I've been there, I only go there to get cash. There's like no reason for me to go there. Bank branches are really expensive, right? I've heard like a bank branch costs like $250,000 a year to run. And they're really focused on customer acquisition. And so the number of parking spaces you have impacts your total customer acquisition. Like if you're driving to a bank and you're like, I'm gonna go open an account and their parking lot is full, people just like keep driving and you maybe lose that account forever. So they're insanely sensitive to onboarding friction. And so I do not see them moving to in-person unless there's synthetic risk, then they may use that as a step up. For your average though, they're like, we absolutely want people to digitally onboard. But yeah, that's a risk mitigation of going old school, but I don't realistically see happening. Let me check my time. Okay. So I get a Social Security the last. There's some rumors that you can actually, there's an insider providing SSNs that are valid, right? And so maybe it's someone at the state of Idaho or the Social Security Administration or a bank that has access to these SSNs that are no longer valid, and they'll steal or sell them for personal gain. So I don't even have to like actually steal one or get one breached. I can just go straight to the source and buy them. Right? This is the hot thing right now is there may be an insider in some entity that has access to these who's reselling them. We see this a lot with SIM swapping, where you can like get someone's phone number switched and it costs like $100 to get a SIM swap from an insider at the various telcos. And so this is a real risk scenario for net new SSNs. The other big area are credit profile numbers or credit privacy numbers. They kind of go back and forth. They're marketed as an alternative to a SSN for like a credit repair, credit building. There's no such thing legally, governmentally as a credit privacy number. They're generally fabricated or stolen Social Security numbers that someone is reselling for you to use. So this is part of that monetization step. If I have stuff here and I don't want to do synthetic, I may just use those SSN for CPNs and then resell those. But both are valid. So they actually work. They meet the check for Social Security numbers, but they are not real, right? Or they're actually stolen. So it's just people think they're using a valid SSN, but really they're just using something from column A. The last bit, I need some kind of identity details. Like a common one is getting a cell phone, prepaid plan, right? Go in, pay cash, pay $20 a month. Secured credit cards are another good one. But this is where I need to get some fake identity documentation first. So fake IDs, utilities, pay stubs, generally using Gen AI, right? You can pay like $5 and get a fake pay stub generated for an auto loan online. That looks real-ish. And then I also can manipulate existing documents. So maybe I have my driver's license and I put a new photo on it, or I put new details on it. So it looks real-ish. So it kind of beat that identity. Or I just buy on the dark web, I say, hey, here's my photo, here's the state that I want, here's the address that I want, and you send them like $100 in Bitcoin. And they'll send you a real-ish driver's license. So now that I have that, I have the initial stuff for a person. Where do these SSNs come from is like mostly Social Security numbers are stolen, right? I talked about elderly people, children, immigrants, right? People who are not actively using their SSNs or ones that are stolen. Data breaches, another common one where we just get big lists of addresses, and then the kind of marketplaces where I can buy names, addresses, emails, that kind of stuff for my own use. It is helpful if you buy emails that have some history that are maybe dormant, so you can beat some of the detection algorithms as well. So now I want to season it. So I need to turn this into something real, something that actually has a credit score. As we all know, the easiest way to build credit history is to use it and then pay it off. And so the first thing that I need to create this financial footprint that I actually exist. So secured credit cards are really good, right? Because the bank, you're essentially in no risk to the bank because you're giving them money. Store cards are really good, right? A Macy's or any private label branded credit card. Generally, they're pretty open for people actually getting them. And so sometimes the risk profiles of the kind of fraud teams internally are not as strong. And so they're like, yeah, we're only going to give you a $500 limit. And so we'll roll the dice on a 23% APR credit card. So you can walk in, get one, apply, good to go. And then I might open a bank account. So now I've kind of created the initials of that I actually need this person to exist, and I have to let it kind of sit for a while. And so it's helpful that the longer an account is open, the more legitimate it looks like. So a bunch of new accounts, as Kenny noted, can be risky. So I might spend a couple years building up one of these synthetics. So now I have an old credit card that's not as open but not being used, and maybe a bank account that's just open but not being used. So next I need to have consistent low value transactions. So I got to build payment history. I got to use that credit card. I got to use that phone line, right? So it looks like normal identity activity is happening. And then as people get more sophisticated, this is where we can actually have bank activity. So I'm like sending and moving money. I'm maybe getting a direct deposit. If I'm really smart, I have a bunch of synthetics just like sending each other money in a distributed way so it doesn't look like money muling, but enough that it looks like there's activity happening. So the bank is like, yeah, Brady looks lower risk. We'll give him a little bit more credit on that item. I also want to build stuff or buy stuff. So I might like go buy gas with that synthetic or go buy, as I'll talk about in a moment, I really want low slippage, right? Any high frequency trading people in the room, slippage is when what you buy it at and then what you can sell it at and the price changes. And so I really want high value fensible items. So anything that you can resell for the same or more is perfect because I can buy it with my stolen synthetic and then resell it and recoup my funds. So I don't have to expend a bunch of cash. In the past, you used to be able to like buy coins at par value. So you could use like a debit card and go to the mint and buy like dollar coins and then just deposit the coins back into the bank and pay off the credit card over time. They kind of closed that loophole, so you can't do that anymore. But like buying crypto and then reselling your crypto back to yourself to pay off those loans is a way to kind of get this low slippage option. Shoes are really good too.
I was just curious, is this like, so this like bad actor doing this, are they also the one often like making these purchases, or is there a whole like secondary market that they'll like have someone go buy and drop ship stuff or something like that?
Yeah, so you can have straw purchasers. If you're really sophisticated, you can have people like, you can actually give the cards to people to use and then they have to repay you. And so that's where if they have like really bad credit, you'd be like, hey, I'll give you access to this high credit, but you have to pay me off with cash and your kneecaps if you don't pay me. And so that you can like start to see this money muling or other activity where you're kind of just like left hand to right hand moving funds around because that builds payment history, that you're not using revolving credit.
So to follow up on that, so I as an end user, as like a victim maybe, could A, have my information stolen and used for synthetic, or B, I could be in a hard spot and go to some loan shark and I could be taken advantage at that level of the cycle too, right?
Correct.
Like,
Correct.
Instead, yeah.
Which is the risk, because then this is like people are taking advantage of people in kind of a bad situation and using them to do this. Like drop shipping is commonly used people like on fixed incomes or social benefits. And you say, hey, I'll give you $2 a package that you receive and then reship and I'll pay the shipping. And somebody making $500 a month on Social Security, 10 packages a week, $20 can make the difference. And so that's where they start to use these other people. And again, you can use Gen AI to talk to those people without having to use your own identity. The last, and this is like a weird quirk that only the US does, is anyone an authorized user on another account? Yeah, so it's like, it's really common that, your parents sign you as like a cosigner, your partner signs you as an authorized user. You have to have like no real relationship to become an authorized user on someone's account. They just have to like say yes. So if you're like a sugar baby situation, you can become an authorized user. That's the key, that's like the first question. But really you add on, and so rather than me having to like do this whole thing over and over, I can just jump on to someone else's credit. If you're, again, sophisticated, you might create a synthetic and then add another synthetic as an authorized user so you can hot start their credit profile. People also sell authorized user access, which is insane to me, for like $50. So I'd be like, Jamie, I'll add you to my authorized user, you just have to pay me $50. But you can ruin my life, but I'll just give you $50. It's like nuts. So if you ever see these like ads online, there's a real shot that there's like some weird authorized user abuse happening. And this is like really only a US thing.
Just another way to monetize like the synthetic by saying, give me $50 and you can be an authorized user.
Correct.
As a synthetic person.
Yes, but it's more worthwhile to get a loan with that synthetic than the $50 to some rando.
Yeah.
if you're smart, you may be like, this synthetic's about to go bust, and so I'm going to charge you $50 for a synthetic that's about to get flagged. And then the account may be closed or offboarded, and so that's like, that might be the last step monetization.
If somebody, like, say were to like pay the $50 to be on that like fake, or to be an authorized user on an account that's about to go bust, like how does that, is that something where you like end up being charged with that fraud in the situation?
Yeah, well, technically you wouldn't necessarily be charged, but it could impact your credit because you then are a higher credit risk because you were an authorized user on an account that went sideways. So those are like kind of messy, but don't become an authorized user on someone that you don't trust is really the key, especially not someone on the internet. Monthly bills are another good one, like phone bills, right, where I get a consistent payment, or like utilities, right, that kind of stuff. You could farm this out to other people who are hard up and have bad credit and can't get like Dish TV. You say, hey, I will do this for you, but you need to pay me, and then I'll prepay that synthetic. So then that synthetic starts getting a phone bill every month that gets paid. Does everyone know a BNPL, buy now, purchase later, like Klarna, that kind of firm? There's a question if this data should be included as credit reporting in the file for most people, right? Right now it's technically alt or alternative data that's not incorporated specifically into the score. I would be very interested in a synthetic because who's gonna have harder onboarding, the bank or Klarna, right? And Klarna does a great job and is in kind of a tough position. But Klarna's probably going to let me do that, and I can buy, now you can DoorDash BNPL, also insane. But I could do DoorDash, and I could farm out those DoorDash payments and then say, hey, I'll order you DoorDash, and you got to repay me, and then I'll put it BNPL so I can start reporting. So this is the kind of thinking that is required of how can I add to that credit file without actually incurring any incremental cost. And then lastly, the most interesting bit is exploitation. And so why cars, right? They're the perfect like vehicle for synthetic fraud, right? Think about, I get a personal loan, $100,000. Like the first payment default, could be more challenging because I have to move that money somewhere, right? I get a synthetic, I get a $100,000 personal loan. Now I have $100,000, great, kind of the W. What do I do with the $100,000, right? I can't Swift send it anywhere because the bank will track those and try to find it. If I buy cryptocurrency, you're definitely getting smoked because finding and running those kind of chain analysis stuff is super easy. You can steal a house. It's really hard, right? Because you then have to resell it, and like the bank could technically repossess it, and so it's pretty challenging. Credit cards are pretty good, low limits, right? So the maximum, on one of these synthetics, you might only get like a $20,000-ish limit. Then you got to like buy crypto, and you're back in that issue area again. So you got to like buy gold, and you have more slippage. Annoying. This is why cars are the best, right? It's literally an asset that moves. Get it? It's like it rolls. Super high value. Pretty much everybody needs a car. They're pretty hard to track, right? Because they move. And so this is why a vehicle is like almost the perfect synthetic item. Because somebody who is low income is probably not getting a $100,000 personal loan, but a dealership will definitely lend you a $60,000 truck on low-ish income. And so now I have a $60,000 truck that I can monetize. And so this is why vehicles are, I think, particularly being impacted. The second area is, how many people have financed a vehicle ever? Raise of hand. Probably most people, right? I'm not Dave Ramsey again, not buying in cash. And so who actually financed through the dealer versus financed through a third party, right? Most folks would be like, oh, well, I financed through the dealer. Well, the dealer most often actually sells that loan to a third party lender like the next day, even that day. Or you get it through a third party like a credit union or something else. And so there's some breakage there because the person who's doing the identity validation has incentives, doesn't have a lot of incentives to manage the second half of the problem, and has a lot of incentives to sell the vehicle. Right? Someone joked earlier, guess who's known for their moral, upstanding nature? Car salesman, right? And so this is why vehicles, you kind of have this, I wouldn't say it's a moral hazard, but like who's holding the bag makes this kind of complicated. And so then it's pretty easy to kind of get around any basic controls, where a bank was going to be pretty strict because it's their money. The best thing is probably international export, right? I take this vehicle, especially high value, high demand, outside the United States, and then it goes on a shipping container that afternoon. So G-Wagons are really common, other high-end vehicles that are desirable elsewhere, Land Rovers, right? Those kinds of vehicles that you could loan, put in a shipping container and ship outside the United States, that vehicle's probably gone forever, right? Your local credit union is not like joining up and flying to Sudan to like go recover that vehicle, right? They're just gonna probably write it off. And so it's super challenging for them to pick it up. And so that's where I would look for like a low jurisdiction country. You know, exporting it to France, Canada is going to be tough, right? A lot of regulations. They're probably going to check the emissions on the vehicle, and you know, maybe the security guard or border patrol is like really on top of it. But if I send it to Saudi Arabia, Sudan, Vietnam, Chile, right, it's probably a little easier. Often done through shipping companies, so I won't actually like legally import the vehicle to another country. I'll just put it in a shipping container with a bunch of other cars or even just a bunch of random stuff. Yeah, I probably lose like $5,000 in the total shipping cost, and then I take a little bit of the L on the purchase price. But if I'm taking a Land Rover that's not legally exportable to that country, I got a $60,000 Land Rover that I can sell for 80 because it's an in-demand vehicle. Like in China, there's like 150% tax on luxury vehicles. So an $80,000 Land Rover all of a sudden becomes a $150,000 Land Rover, so $100,000 is a great deal. So now all of a sudden I've turned my $2,000 synthetic into $90,000 in clean cash. And so that's why international is a good option, especially where you can export to higher value markets. Local resale, like I can wash that title. This is a little higher risk, right, because the vehicle's still in the United States. But I can transfer that title to a low, like low sophistication. Like some places have really, really high bars for registering a vehicle, some don't. And so I can transfer or wash that title by moving it to somewhere with lax title requirements and get it a new title under the same VIN, but new title. And that erases any liens or kind of the fiscal relationship with that vehicle. And now I'm good to go to resell it in like Massachusetts. And then, or a fake lien, that I put a fake lien on it and use that to erase the title. And then I do kind of a fake lien sale. And now I have a clean title of the vehicle that I can resell or turn into something else. If you're really smart, you like hermit crab, like a $50,000 truck into a $90,000 like luxury SUV into a $120,000 sports car, because you can just like keep turning them over. Eventually you'll get to a point where like, okay, now it's time to actually sell the vehicle. And the last and most recent is like illegal subleasing, that I still have control of the vehicle, but I rent it on something like Turo, or I let somebody illegally drive it for an Uber and then they pay me. So I actually get to monetize the vehicle, and it could be a bunch of different places, but I don't actually have to possess it, so I can make money on that synthetic over time. And so those are pretty common. Recovering the vehicle is also really complicated, right? If you kind of combine these, so I wash the vehicle's title and then I move it to somewhere with like a lax title requirement, and then I put it on Turo in like Hawaii, where Turo is really common, then I could generate income from that vehicle. Or I put it somewhere where it's going to be challenging to recover. So like a small rural region far away that it's going to be really hard for the like Dog the Bounty Hunter kind of like repo people to pick it up because they have no idea where the vehicle is. Where does this generally happen? Memphis, Tennessee. There's some like contagion where people are learning these tools and then talking about them, and they tell their friends, and you start to have some like local virality. People are seeing Memphis is generally where that's happening. And then the proximity to shipping channels, it's really easy to ship them to Texas or Florida, so you can export them easily. Similar story in Tampa, much easier access to higher end vehicles, people driving above their lifestyle in the Florida state. Makes it really easy to transport it, right? Because these are all costs, right? This is a business. If I have to ship the vehicle, that becomes expensive. And then lastly, Houston, similar overall story. Does anyone want to hear about detection, or you want to save some time for a Q&A? Some yeses on detection? Okay. So really, if we're looking at, how do tools look for synthetic identities? The key is really rapid or sudden increases in credit scores or limits, especially dormant SSNs, what we call hyper credit monitoring, people who are looking and getting a credit report like every couple of days, real good indicator of synthetic. Similar multiple inquiries, we call this like loan or device stacking. Most people are not picking up the new credit information fast enough. So if you have 4 loans for a car in a day, that is a risk, right? That seems like, wow, you must really like cars. That would, where we would see like abnormal rapid succession, like opening 4 or 5 credit cards in a row is abnormal. The last are thin files, right? These are people with limited credit history, right? So they might be new to the United States or have a dormant SSN that are like, hey, we just don't have a lot of info. You know, somebody buying a $70,000 Range Rover who's never had credit before is odd, right? And so that would be an area where you'd look at depth and history of credit is a kind of good example of synthetic. The key here is you might be new to credit, but you're not new to the world. So you might look at alternative data like, do they have payment history? Do they have an email that we've seen before? Have we seen this phone number? And that's where you can kind of fill out. And if none of those are true, you're like, you didn't just like appear in the world, right? That is a risk signal. Employment and income verification, most of these people are now requiring real income and employment verification. So if you see a lot of inconsistencies with reported income, like they're a truck driver, but they make $200,000 a year, or they're a sole proprietor with a website that no one's ever heard of, that with Secretary of State filing that's like 2 years old or a year old and no income, no reported income. Those are all inconsistencies that you can see because people, unfortunately, have to work, including myself. I like mine, but would be nice not to work. And so that's where we'd see odd things there. And there's some employment verification stuff that people are now starting to do to be like, okay, you actually make money. And then odd documents, like they live in Idaho, but they have a Maryland driver's license, like that would be weird. Or they're applying for a loan with like a Honduran passport that was just like newly issued. You're like, that's kind of weird, or like a brand new passport. Unusual formatting or like no insurance record. So they have a pay stub or document that makes sense, but it's like formatted all weird or all blurry. Right? This was much more common in the pre-Gen AI era. These were pretty easy to spot. You're like whiteout. You're like, oh, come on, guy. But now with Gen AI, it's pretty easy. And then the last is loan anomalies. So like really high financing. So like $0 down, super high vehicles where someone not kind of in that position in life, especially if it's a luxury vehicle or in a high-risk region. So if you have like a thin file, getting a Maserati in Long Beach, like huge risk. And you're like, this is probably bad. And so then you can take kind of the loan to value other stuff into account to look for anomalies in that the vehicle itself, right? There are certain vehicles that are like 10x the synthetic risk than other stuff. Weirdly, it's a lot of like super normal people cars, like highly resellable, like a Camry, and then like luxury vehicles, trucks, high-end SUVs, that kind of stuff. So I'm pretty close to out of time. Any questions? 2, sweet.
Do you like, because I like at the beginning of this, I was like $2 billion versus divided by like $32 million or cars sold last year. That's $60 a car, which is not that meaningful, but like in places like Memphis or with cars like Maseratis or whatever, it's like kind of has the highest synthetic risk. Do you see a meaningful increase in like how much those cars cost or what the interest rate on financing those cars is to account for that?
So some of it will not show up in the cost of the car. A lot of it shows up in financing, right? If you have a 2% loss ratio from synthetic, like let's say you're a bank, you have $1 million to loan out, you're expected to make probably $70,000 in like total value on those loans. Right now, yeah, that's like 70,000. If like 2 of those cars go sideways and now you're out 70,000, you didn't make money on any of the rest of the loans. And so in a 1% synthetic, their margins are pretty small. And so what they'll do is they'll just take an increase to overall rates. So everyone is impacted by those. And so it doesn't sound like a lot, but taking synthetic from a 2% to 1% would probably, this is my own opinion, could lower interest rates by 1%. And you know how much people are freaking out about interest rates changing 1 or 2% right now. It makes a huge difference to the total cost of financing. The other part of it is it becomes more expensive in the dealer. And so you're having to do more verifications, more checks. And so you could be locking out people, right, who are underbanked or unbanked, where then they have to kind of engage with these services, preventing, helping them live their financial best, to use an aphorism.
But it's not like geographically linked, like you don't see higher cost of financing in
Yeah, generally dealers are not doing that. They might put it into their risk model overall, but you don't see it as like a huge signal.
Gotcha.
Probably have time for one more.
To piggyback on that question, you said that this is people do this with houses too. Does that affect mortgage rates?
Similar. It's a lot. We don't see it as much. It's hard to steal a house in the same way, but it would impact. It's just all loss ratios, right? If they're taking 10 basis points of loss on a house that they were going to make $50,000, well, on a house probably 200, and now they make 0, right? They're going to incorporate that cost into the rest of their business. It's just like people talking about like shoplifting. You're like, it's free to you, but it's not free to everyone else because they just incorporate that cost into the rest of the business. So home loans, it's not as big a deal just because it's hard to like monetize the house. You got to get someone to rent it, and it's much more challenging than a car where you can just like sell it and move on. Last one.
Okay, this is maybe not related to, tell me to ignore it, but do you see this use of synthetic identities around like when people need perhaps a legal identity with say like license? Well, I'm thinking licensing, right? Because like I work kind of in like the cannabis licensing space, which I know is not super relevant in Idaho. But like, do you see that? Like, is that a risk for that as well, where someone says, "Hey, I have to go, get a license in this highly regulated industry with the government to prove I'm a person. Like, let's get around that." Is that a thing that we see a lot?
I haven't dealt with those exactly, but the functionality is there that if we've created this ecosystem for creating fake people, the licensing would be more challenging. That said, we are seeing people use synthetics and they get the documents good enough that they can get like a real, not a stolen driver's license. They go to the DMV with the right documents and they issue them a real driver's license. And so once you have a real driver's license, you're probably in a much better position to create that like real human person. You get a driver's license, maybe you get a passport, right? Now you're a real deal. We do gotta clear out. I have a little extra time for questions in the back, but thank you so much. You can connect with me on LinkedIn. This is like really my issue area. Again, thank you.